Hello everyone. Now let's start a new chapter, and that is definitions. Definitions of the important words that we are going to use in the CGST Act as well as the IGST Act. Okay. Now few words which are defined in CGST Act are also used in IGST Act. So they are not defined separately in IGST Act because the meaning will be considered same. So in IGST Act only few words are defined which are, you can say, not defined in CGST Act, or they have to be given a different meaning than CGST Act. Only those few words are defined in IGST Act, right? Otherwise all other words are defined in CGST Act. So if a word is defined in CGST Act, right, will carry its meaning even in IGST Act if not defined separately, right? If a contrary definition is not given in IGST Act, then the meaning which is given in CGST Act will be carried in IGST Act also. Okay, very good. So first we'll start with CGST Act. Now since this is chapter of definitions, we'll read the definitions here, but to be very frank, you will not understand the real implication of these meanings, most of them, because right now we are just looking at the definition. In the later chapters, when we'll see the real thing where these words are used, the real law, the real sections where these words will be used, so at that time you'll understand the implication of these definitions, right? So right now we are just going to read them and try to understand them. Meaning means understanding, so we'll understand these definitions, and what we'll do is I'll make you write the chapters in which these words will actually come into play. So you will note it down, and then when we'll go to those chapters and these words will come there, then we will recall that look, we had seen this definition at that place in the definition chapter. Okay, so these definitions are to be read and remembered at all times, not to be mugged up, please, not to be mugged up, but to be remembered. What to remember? The application of the definition, what is covered, what is not, the real meaning, the understanding has to be remembered, not word by word, not verbatim. Okay, so let's start. Keeping all those things in mind, let's start. The first definition under CGST Act given there is section 2 clause 2. Achha, this also you must know that this is not called as subsection 2, this is called as clause 2, because in definition section each word is different, means it is a list of words, definition of a list of words, and the numbers which are allotted to a list are called as clauses, and if a further list is appended to it, then it will be called as subclause. So this is clause 2, okay, section 2 clause 2, to be technically right. Very good. So let's see what is the word address of delivery. Address of delivery, this will come into play in the chapter of place of supply. So when we'll go to the chapter of place of supply, and also while defining whether it is interstate sale or intrastate sale, means within a state or one state to another. So in that, sometimes you have to see the place where the goods or service have been delivered, where the delivery took place, to determine the place of supply. So in that context, this definition is given, which says that address of delivery means where the goods were delivered or where the service is delivered, means the address of the recipient. Address of the recipient. So there are two players in the whole GST, one is the supplier and one is the recipient. One who supplies is called a supplier, one who receives is called as the recipient. In our service which is going on right now, I am the supplier and you are the recipient. I have sold the DVD to you and you are watching it. So I am the supplier, Farooq Haque Classes is the supplier, and you, the student, are the recipient. So in the bill that I have given to you, I have mentioned your address, right? In the invoice that I have sent to you, I have mentioned the address. So that address which is mentioned will be called as address of delivery. So that is defined here. Address of the recipient of goods or service or both indicated on the tax invoice. So underline tax invoice. So whatever address is mentioned on the tax invoice will be called as address of delivery. Issued by the registered person for delivery of goods or service or both. Simple. And it is given below in the explanation part that address of delivery is relevant to determine the place of supply of goods other than import export. Part of it you will understand, part of it you have to just read right now, because when we'll go to the chapter of place of supply, at that time you'll understand the full context. Although currently this phrase does not find mention in GST Act or rules other than the definition clause, it is understood that the address of delivery would be crucial pointer towards the location of goods at the time of delivery to the recipient. So when the goods are delivered to recipient, where they are, what is the place where the goods were when they were delivered to the recipient. The place of supply of goods or service or both would primarily be the location of the goods or service or both at the time of delivery. Location at the time of delivery to the recipient. So when I would say that where did the supply took place, the answer is where the goods were at the time they were delivered to the recipient. So for that purpose, this address of delivery will come into play. It will be considered as an evidence of where the goods were at the time of delivery to recipient. So though the words address of delivery is not used anywhere in the Act, but it has a contextual meaning. So that was an interesting one. The second one we are going to see is just to be read and then left. Address on record means the address of the recipient as available in the records of the supplier. Now this point is also going to come into play in place of supply. So there are various services like telephone, like the mobile, you have got postpaid mobile connection. So the place of service will be considered as the registered address of the recipient in the books of the supplier. So when we take a connection, we give an address, then that address is verified also. Those people come to our home or office and verify the address and do all the other stuff, and then that address is registered with the supplier, right? So that address becomes place of supply in many cases. In which cases? That I'll not tell right now. We'll study in place of supply chapter, which is a big chapter. Then comes section 2.4, that is adjudicating authority. Now what do we mean by adjudicating authority? Adjudicating authorities are basically the assessment authorities. So later on we'll see the chapter of assessment also. Like in income tax there is assessment. So in GST also there is assessment. And then there are a lot of small things to be done, like approvals to be given, documents to be filed with authorities and so on. So all these basic department authorities are called as the adjudicating authorities. But adjudicating authority does not include the appellate authorities. Okay. So there are two authorities. One is adjudicating, which decides the original matters, and the second is the appellate authority, which decides appeals arising out of the original orders. So authority which passes the original order is called as the adjudicating authority, and later on people who decide appeals are called as the appellate authority. So that is how the department is made of. We'll study in detail later on. So here the definition is given, that it means any authority appointed or authorized to pass an order or decision under this Act. So anyone who is appointed to pass an order or decision under this Act, but does not include Who are not included? The Central Board of Indirect Tax and Customs, the board itself, the CBIC. Earlier it was called a CBEC, now it is called a CBIC. Then revisional authorities. These are authorities who have the power to pass revision orders. So they are not adjudicating authorities. Then authority for advance ruling, the authority which gives the advance rulings. Then appellate authority for advance ruling, which hears the appeals out of advance ruling. Then the appellate authority. These are the appellate authorities who will hear the appeals out of the adjudicating authority orders, the original orders. Then appellate tribunal, which is one step beyond the appellate authority. Appellate authorities are like commissioner appeals, and appellate tribunal is one step ahead of the appellate authority. And the authority referred to in subsection 2 of 171. Here you can write down, these are called as anti-profiteering authorities. Anti-profiteering authorities are authorities appointed by the government to see that the traders don't make profit. Now this happens when the government, say, reduces the GST rate or grants certain exemptions. So these reduction or the exemptions must be passed on to the consumers. Means by way of reducing this sale price, the ultimate sale price. And if that is not done, if the MRP is not reduced and the benefit of reduction of tax is not passed on to the ultimate consumer, then that is called as profiteering. So who is profiteering? The traders. That should not happen. So if that is happening, then this authority will check and will pass orders, the necessary orders. So that authority is also not an adjudicating authority. Okay. Then next is agent. Interesting one. Agent. Agent means an agent. Everyone knows. Who deals on behalf of someone else is called as agent. Simple one. But here a functional definition is given. So what it says? Means a person including means it is inclusive definition, a factor, a broker, a commission agent, adhatya is the local word of agent, the Sanskrit word you can say, del creder agent, all these things you have studied in Sales of Goods Act, in CPT. Do you remember? Very good, excellent. Auctioneer, who auctions the goods, or any other mercantile agent by whatever name called, who carries on business of supply or receipt. Now this is the main part of the definition. These were the examples, these were the different names that are given. Now the real definition comes. Who carries on the business of supply or receipt. So you can have sales agent, you can have purchase agents, you can have agents to receive, you can have agents to supply. Okay. So supply means what we understand as sales. Receipt means what we understand as purchases. So these agents can do any of these things, supply or receipt of goods or service or both on behalf of another. So this another is the principal. Right? He is the principal. Simple one. Then next is aggregate turnover. This is an interesting one. Mark it as very important. You have to remember this at all times. This is a very interesting. Now this will come at various places. Aggregate turnover will come at various places. It will come in valuation chapter, it will come in ITC, it will come in composition scheme, and so on and so forth. So this has a very great impact on the whole GST. So you have to remember this, and it will come in the exam also, not verbatim but application. So let's see, aggregate turnover means the aggregate value of all taxable supplies excluding the value of inward supplies, excluding the value of inward supplies on which tax is payable by a person on reverse charge basis. Now reverse charge basis means, let me explain in brief, we'll be seeing this in detail later on. There are certain goods and services where the government says that the supplier is not required to pay tax. The supplier is not required to pay tax, but the tax is to be paid by the recipient. So that is called as reverse charge. Normally what happens? What normally means the forward charge. Forward charge means the supplier will collect tax from the recipient and pay it to the government. Like in our case, I have levied GST on the lectures that I am giving you. I have recovered GST from you and I am paying it to the government. So this is called as forward charge. In reverse charge, what happens? The government says, supplier Farooq Haque, don't pay tax. So I will not pay tax. I will supply the goods or services to you without GST. Okay? So suppose I am selling something to you at 10,000 rupees and the GST is at 18%, means 1800. I will not collect tax. I will not pay tax. You, the recipient, will have to pay tax to the government directly. So it is your responsibility to pay tax to the government. So 1800 is the amount that you will pay separately to the government. So you will pay 10,000 to me, the value of the goods or service, and 1800 separately as tax to the government. Understood? So that is called as reverse charge. Very simple to understand. So now the question is that if we are calculating your aggregate turnover, right? If we are calculating your aggregate turnover, so there will be sales from your end. You will be supplying various goods and services to your clients and customers on which you are liable to pay tax, as well as you are paying tax on your inward supplies. The supply that I made to you is your inward supply, and then the supply that you make is your outward supply. So will this inward supply on which you are liable to pay tax on reverse charge, will it be included in your aggregate turnover? Will it be called as your turnover? Inward supply means your purchases. Will these purchases be considered as your sales? Will it be included in your turnover? So answer is no. It will not be included. So that is written here, excluding the value of inward supplies on which the tax is payable on reverse charge basis. So this is not to be included in your turnover. Remember? Very good. Then again, exempt supplies. Now exempt supplies is what? To be excluded or to be included? To be excluded or included? Included, my dear friend, included. So this bracket ends here. The exclusion bracket ends here. So these all points are now to be included. Okay. So aggregate supply means aggregate value of all taxable supplies, then exempt supplies. So exempt supplies means some goods which are exempt. We are going to see this chapter also, exemption. So like for example that I am supplying lot of goods A, B, C, D, out of which D is exempt from GST. It is exempt. So in the year I supplied taxable goods worth 20 billion and exempt goods also worth 5 billion. So what will be my aggregate turnover? Both inclusive. 20 plus 5 is equal to 25. Okay. So exempt goods are to be included in aggregate turnover, right? So you have taxable, you have exempt. Then you have exports. Exports are normally exempt, but they will also be included in aggregate turnover. Okay. Exports of goods or service or both. And interstate supplies of persons having same PAN. Now what does this mean? Interstate supply means when we supply goods from one state to another. Like I am sitting in Nagpur and if I supply goods to somebody in Himachal Pradesh, that will be called as interstate supply. So there are two aspects to it. One is that we have to take supplies intrastate, that is within the state, as well as supplies outside the state. Both are included in aggregate turnover. Means my supply within the state, turnover inside my state, as well as turnover to other states. Both are to be included. Exempt goods, export goods, taxable goods, all. And the second part is having same PAN number. Means if I have got 6 registrations in 6 states. Now let me tell you in brief about this, okay, how this happens. Now if I'm having only one business premises in one state, then I'll have only one registration, right? All these things we are going to study in the chapter of registration later on, but I'm telling you in brief right now. So if we have one business place, we'll have one registration. If I have got 6 offices of same business, my business is the same, Farooq Haque classes, but if I'm having 6 offices inside one state, like for example, I'm having office in Nagpur and Pune and Bombay, all of them are in Maharashtra, then I'll have again only one registration. There will be only one registration in GST. But if I have got 6 offices in 6 different states, then I have to obtain 6 different registrations. This is an interesting part of GST. If your state changes, then even if the business is the same, you have to obtain different registration. Because law says that they will be distinct persons. Now why distinct? This we'll understand later on in the course of our discussion. But right now you just remember this point, that if your second office is in a different state, you'll have to register it again with that state. But with the same PAN, your PAN number, the income tax PAN number will remain the same because your business is the same. Owner is the one person, so his PAN number is 1. So when I'll have a separate registration in the other state with the same PAN, then for purpose of calculating aggregate turnover, we'll have to aggregate the turnover of these 2 registered premises as well. So now I'll not calculate aggregate turnover separately for my Nagpur office and separately for my Bangalore office or Hyderabad office or Delhi office. No, it will all be taken together. For the purpose of aggregate turnover, the turnover of all my registered premises with the same PAN will be taken together, will be aggregated. And not only intrastate but also interstate. So all the intrastate supplies of all these places, all the interstate supplies of all these places will all be taken together. And hence it is given further to be computed on all India basis. Means if I have got 50 offices, whether with separate registration or not. Because if in the same state I have got 3 places, they will be with 1 registration. But their turnovers will also be aggregated. And if I have got different registrations with same PAN number, they will also be aggregated. So that will make my one aggregate turnover. Understood? But excludes. Further it says but excludes central tax, state tax. Central tax means CGST, state means SGST, union territory tax means UTGST if we are in a union territory, and integrated tax, that is integrated IGST, which is on the interstate supply, and cess. Cess means that state compensation cess. So what it means is that turnover is to be calculated excluding taxes. Aggregate turnover will not be inclusive of tax. Aggregate turnover will be exclusive of tax itself. Right? Simple. So again, if we go through the whole definition, what it says, that you have to include all taxable supplies, turnover of taxable supplies, exempt supplies, exports, and also the interstate supplies. And it is to be calculated of all your PAN registrations on all India basis. Right? all your PAN numbers with all India basis, but excluding the taxes itself, and excluding this one point, that is where the tax is payable on reverse charge by us on our inward supplies. So that inward supply, the tax is paid by us, but it will not be counted in our aggregate turnover. So aggregate turnover basically means the sales side and not the purchase side. Okay. But one more point to be noted in this is that when I supply goods to you on which there is a reverse charge, so I supply 50 lakh worth of goods to you on which there is a reverse charge, so you are going to pay tax. So in whose aggregate turnover will this 50 lakh be included? Yours, who is paying tax, or my turnover, the supplier, who is not paying tax? So here it is written that it will not be considered as part of your turnover. It will not be considered as part of recipient's turnover, right? So will it be included in the supplier's turnover? Answer is yes. Even though the supplier is not paying tax on it, tax is to be paid by the recipient, but this 50 lakh will be included in the turnover of the supplier. Remember this, okay? So very good. So this is one of the important definitions. Then moving ahead, now there are some simple definitions. Agriculturist. This will come into play in the exemption chapter. We'll see that there are a lot of exemptions given to agriculture related activities. So the point comes that who is an agriculturist? So it is defined here. So agriculturist means an individual or an HUF. Agriculturist means an individual, the farmer, or an HUF, even the family can be into farming, who undertakes cultivation of land by own labor, by the labor of family, either by myself or with my family, or servants on wages payable in cash or kind, or by hired labor under personal supervision or the personal supervision of any member of the family. Means if I let out my land to someone and he does agriculture, then I am not agriculturist, because I have just let out the land. Am I supervising? No. So then I am not agriculturist. So people who just let out their land to someone, to some farmers to cultivate, that farmer is an agriculturist, but not you. You are just owner of land. You are not doing anything. You are not even hiring servants. You are not even supervising them. So you are not agriculturist. So to be an agriculturist, either you have to toil yourself, or your family, or your servants whom you supervise. Servants means whom you supervise. So you may not take the axe in your hand, but you are supervising the labor. So then you are agriculturist. Okay. But if you simply let out your premises, I mean to say your land, then you are not agriculturist by this definition. Then moving ahead, Appellate Authority, there is no need to read it right now. Appellate Tribunal, all these things we'll study later. And anyways, if you see the definition, it is nothing. It just says authority appointed under so and so section. So when we'll go to these sections, then you'll understand what these authorities are. Then appointed date. Appointed day has one meaning, that it started. When did this law start? So it says appointed day means the date on which the provisions of this act shall come into force, which is 1st of July 2017. So that is what you have to remember, nothing else. Then assessment. Assessment means determination of tax liability. Assessment is also called as adjudication. Hence the authorities are called as adjudicating authorities, that I explained to you earlier. So assessment is also called as adjudication. Remember. So what do we do in adjudication? Determine the tax liability under this act, and includes self-assessment, reassessment. Self-assessment means the assessee himself. Before we file our GST returns, we have to assess our own tax and pay the same, and then we file our returns. And then when we file our returns, the department reassesses or assesses or does provisional assessment and so on and so forth. So reassessment, provisional assessment, summary assessment and best judgment assessment. All these points we will see in the definition in the chapter of assessments in detail later on. Then associated enterprise has a meaning, but they don't define it. They say refer to section 92A of Income Tax Act. So this is the definition which is given in transfer pricing chapter. So when you study your DT, if you have already studied, then you know what is transfer pricing, right? So in that the definition is given. It's a long definition. So the same definition is carried over here in GST of associated enterprises. Then comes business, section 2 clause 17. Now this is a long definition, and this we will study in the chapter of supply, section 7 in detail, because that is the place when this definition will be used and understood. So right now, even if I explain, it has no meaning. So leave it right now. This will study in the chapter of supply, section 7. Then next is capital goods. This you will need in the chapter of input tax credit. Very interesting chapter. So in that the inputs will be defined as normal inputs, that is raw materials and all, or capital goods. So what is capital goods? Means goods the value of which is capitalized in the books of accounts of a person claiming the input tax credit, and which are used or intended to be used in the course of furtherance of business. Like all the machineries, furniture, fixture, computers, which we hold, which we capitalize in the books of accounts, and we are going to use them over a length of time. So they are called as capital goods. Simple definition. Then an interesting definition. Casual taxable person. This is very interesting. What it means is a person who occasionally, not regularly but occasionally, undertakes transactions involving supply of goods or service or both in the course of furtherance of business, whether as principal or as agent or in any other capacity, in a state or union territory where he has no fixed place of business. So it's a very simple thing. Like even I am included there, Farooq Haque. What I do is, or keep doing, that I keep small batches, maybe 3 days, 4 days batch in different places. So I'll go there, just take a class and come back. I don't have any registered place of business in that state or a fixed place. I don't have a branch. I don't have anything. I come to Bangalore, take a 3 days lecture and go back. I come to Hyderabad, I go to Vijayawada, I go to Chennai, I go to Coimbatore and lot many places in south and same ways in north. I go there, I take a batch and then that's it. So do I have a fixed place of business there? Do I have a branch or a fixed place, an establishment, an office? No, nothing. Just students register on the net and I'd go there, I take a batch, finish. So for those places I will be called as a casual taxable person. Now this was example for service. Same way it can be for goods. For example, there is a diamond merchant, and what he does, he carries a lot of diamonds in his briefcase and goes to places and sells these diamonds and come back. So he doesn't have a fixed place, he doesn't have a jewelry shop in those places, but he has his clients. So he goes there, shows them to his clients, sell it, come back. So these people are called as casual taxable person. Now later on in the course of our discussions, we'll see how they pay tax in different states. Because if they go to maybe Bangalore and do some business there, they'll have to pay tax in Bangalore. So how will they pay tax? Because they are not normally registered there, they don't have a fixed place. So this is what we are going to study. How a casual person pays tax. very interesting concept for that. But I'll not tell you right now. We'll see it later on. The next is common portal. No need to study. Common portal means the GSTN, the site. Then common working days. In respect of state or union territory shall mean such days in succession which are not declared as gazetted holidays by the central government or the concerned state or union territory. Means those days on which both are working, central and state both are working, are called as common working days. No use. Then comes another very interesting and important definition consideration. It's very important, but again we'll study in the chapter of supply. So right now you leave it. We'll study in the definition of in the chapter of supply along with section 7. Then comes 232, continuous supply of goods. Interesting one, continuous supply. Now this is also used for supply, that when does supply take place? When does supply take place? So if it's a continuous supply, then we'll see that how it is to be determined. Supply kab hua means when did the supply take place? When this question arises, there are different methodologies for a fixed supply, means one time supply, and for continuous supply. So the rules differ. So basically the chapter is time of supply. This is the chapter in which this definition will come into use. So right now we'll just see the definition. So it says continuous means a supply of goods which is provided or agreed to be provided continuously or on recurrent basis under a contract, whether or not by means of a wire, cable, pipeline or any conduit. Like oil is supplied in a conduit, a pipeline, continuous supply goes on from the supplier to the refinery. It's a continuous basis. The production is going on and the supply is coming in. Similarly, electricity is supplied by wire continuously, and for which the supplier invoices the recipient on a regular or periodic basis. Now they can decide amongst themselves that I can send you an invoice on monthly basis or weekly basis or any other basis, and include supply of such goods as the government may, subject to conditions, notify in this behalf. So government has also got the power to notify certain goods which will be deemed to be supplied on continuous basis. Otherwise the normal definition is something which is on continuous recurrent basis, for which the billing is done on some cycle wise. There are some cycles which are decided and the billing is done on that cycle. So that is the definition of continuous supply of goods. Similarly, you will have definition of continuous supply of services. So it can be goods, it can be service. Like you see the next one, it is on the same lines. For services you will have many examples like mobile. Your mobile connection, you are using it for years. The number which you are using is used for years, and every month you get a bill and you pay it. So that is the best example. Then internet connection, then credit card. We use the card and it is on a continuous basis. We are using it since years, and every month the credit card company makes an invoice and issues it to us, and then we'll pay for that invoice, and then next month, and then next month, and so on and so forth. So it's the same thing, but there is a slight difference here in the definition part. Let's see. Means supply of services which is provided or agreed to be provided continuously or on recurrent basis. Till here it's the same, under a contract for a period exceeding 3 months. Now here the difference comes. For goods there was no such minimum time. It was just said on a recurrent basis. Here it is minimum 3 months. So if I am going to supply some services to you for a recurrent basis but only 2 months or 2.5 months, the contract is of 2.5 months, then it will not be called as continuous supply. It will be called as a normal supply. So the minimum period for service to be called as continuous is 3 months. It should exceed 3 months. With periodic payment obligations and include supply of such service as the government may, subject to such conditions as it may by notification specify. Means government has got the right to specify certain services as continuous services. So when the government specifies something as continuous, then it can be for less than or more than 3 months. Both will be called as continuous. If the government says that construction is a continuous service, then it will be continuous service, even if the construction is finished in 1 month or it takes 4 years, it will be called as continuous. So what the government prescribes are called as the deemed continuous services. So then you don't apply the logic of 3 months. It can be less, it can be more. But other than the government specified ones, the normal definition applies. It should exceed 3 months. Then it will be called as continuous supply of service. Okay. And the explanation is also given. And a lot of things are given here, but you will not understand them right now. This you will understand when we'll go to the chapter of time of supply. So you just go through it once, and even if you don't understand, let it be. Though I don't think there is nothing to not understand, but still we'll see it later on. Then deemed exports, document of no use. Then drawback. Drawback means return or refund. Drawback also means refund, or also called as rebate. It can be called as rebate, it can be called as refund. Different names are attached to it. Drawback means take back. Simple. So what do you take back? The tax that you have paid is returned to you. So it says drawback in relation to goods manufactured in India and exported. So when does this happen? When you export the goods. Means rebate of duty, tax or cess chargeable on any imported imported inputs or any domestic inputs or input services used in the manufacture of such goods. So the drawback word specifically relates to exported goods. So you are a manufacturer, take an example, right, and you bring your inputs, that is your raw materials. So if you import your raw material, then there will be customs duty on that, plus the IGST part which is levied on customs. When you import the goods into India, you pay the customs duty as well as the integrated tax, that is also called as the CVD of GST. Integrated tax is paid, plus many other duties are payable, right, on import. Then if it is domestic, if you buy these goods intrastate, then there will be the GST, CGST, SGST or UTGST. And if you purchase from other states, then there will be IGST. So all these duties and taxes will be payable on your inputs, right? So when you purchase the inputs, all these come, say for example 3,000 and 6,000. So total taxes paid is 9,000 on your inputs. Now what you do, after getting these inputs, you manufacture your finished goods. You manufacture finished goods, and if you export these finished goods out of India, then what happens is that 9,000 which had been paid on your inputs as different kinds of taxes, that will be returned to you. So that is called as drawback. So you will get a drawback of 9,000. The government will return you the 9,000 which you had paid on your inputs. And this is because export is called as zero rated. So there is a whole concept of zero rated which we'll study later on in the chapter of IGST. The export will also come in IGST, and duty drawback and all these things will come in IGST. So, but here you remember this one point, that zero rated means what? These are my inputs, purchases, and then I do something here and then I make a sale. So if my sale is export, then not only my sale is exempt from GST, sale is exempt, not only sale but also the purchases become exempt. So exemption is on both sides, sale side as well as purchase side, both become exempt. So that is called as zero rated. So this kind of supply is called as zero rated supply. Not only the sale is exempt, the purchase is also exempt. But when I purchase these goods, the tax was imposed by the suppliers. So government refunds me that tax. So exemption means I get refund. The complete taxes paid on purchases are refunded to me in the name of duty drawback. Understood? Then come back. Then there are a few definitions of electronic cash ledger and electronic commerce and electronic commerce operator. Okay, let's see. First we'll see electronic cash ledger. This is a technical side. The taxes that we pay, the amount that we deposit to the government as GST goes into this electronic cash ledger. So cash ledger means the cash payment part. So you'll have two ledgers, cash ledger and credit ledger. One is credit ledger. So credit ledger is for our ITC, input tax credit. Whatever input tax credit we avail goes into our electronic credit ledger account, and when I deposit cash with the government, that goes into my electronic cash ledger. So there will be two ledgers that we'll maintain. How they maintain, what happens with them, this we'll discuss later on in the chapter of input tax credit. Then next definition is another interesting one, electronic commerce. Everyone knows what is electronic commerce these days. You all buy on Amazon and Flipkart and this and that, right? So this is electronic commerce. So means supply of goods or services or both, including digital products over digital or electronic network. So product can be physical or digital. Like software is a digital product. But when you buy goods, when you buy a phone, a mobile phone on Amazon, that's a physical product. But it comes, you are booking it online, and then it comes to you, comes to your house. So that is called as electronic commerce. So you can write the examples. Amazon, Flipkart, Farooq Haque classes, FHC online, and so on and so forth. These are all electronic commerce, and the person who does it is called as electronic commerce operator. So next definition, one who does electronic commerce is an electronic commerce operator. Simple. Means a person who owns, operates or manages, owns, operates or manages the digital or electronic facility, means the site, the portal or platform for electronic commerce. So FHC online is electronic commerce operator, and the business we do is electronic commerce. And it includes every person who directly or indirectly owns, operates or manages a digital or electronic facility or platform for supply of goods or services or both. There is a certain ambiguity as to whether persons engaged in supply of goods or service on their own behalf would also be covered in this definition. There is this ambiguity in this definition. Like for example, Farooq Haque classes offers various products, not just classes of Farooq Haque. It is not just my class, but we offer so many other teachers. I've got a bundle of teachers on our site, Farooq Haque classes. So therefore, I am supplying my own product as well as others' products. So then I am ECO, no problem. But there may be a person who records his lectures, who makes his site and sells his lectures through his site. That's it. Means it is like a shop for his own goods. So will he also be called as electronic commerce operator? Because he is selling online, means any person who sells online, even though they sell their own products, like many companies have got their own websites and they sell products on their websites also. They take bookings. So do they also become electronic commerce operator? So this is not clear right now. Then who is an ECO? One who supplies others' goods or one who supplies his own goods? That is not clear. So therefore it's given that this is ambiguous. The definition is ambiguous right now. Then there is another problem, and that is aggregator. Now in electronic commerce there are two types of sites. One is aggregator and one is the actual person who provides the goods and services. So one is aggregator. Who is an aggregator? Who doesn't do anything. He only aggregates the suppliers together. Like there is India Mart. Have you seen India Mart site? They only aggregate the suppliers. Then you have already seen Ola, Uber, Swiggy, Zomato. So these are just aggregators. What they do is, like Swiggy and Zomato, that they aggregate the real suppliers, that is the hotels and restaurants. So they don't do anything. They just aggregate the suppliers and they sell on the website. Similarly, Ola is an aggregator of taxiwalas. Uber is aggregator of taxiwalas. So like that. So here it says that while the aggregators like Ola, Swiggy, etc. only connects the customer with the supplier or the service provider, an e-commerce operator like Flipkart or Amazon facilitates the entire process of supply of goods and provision of service, and including Farooq Haque classes. But under the GST law, even the aggregators would be covered under the definition of electronic commerce operator. So the definition given here is quite wide, is very wide enough, and it will cover even aggregators. So whether you are just an aggregator or you are actually running the whole process makes no difference. Both of them will be called as electronic commerce operators. So all of them are included here in GST. Then the following aspects need to be noted. The threshold limits for registration would not apply, as he would be required to obtain registration irrespective of his turnover. Now these points are depth points which we are going to study in various chapters. So right now if you want to read, you can read them. Even if you don't read, it's fine, because all these aspects we are going to cover at different places. So threshold limit of registration means the minimum limit of 20 lakhs and 10 lakhs as the case may be. So what happens is that in normal course, a person whose turnover is less than 20 lakhs need not register himself. The law says that your registration requirement arises only if your turnover exceeds 20 lakhs and 10 lakhs for special category states. For some states it is 10 lakhs, for other states it is 20 lakhs. But these limits do not apply to electronic commerce operator. So electronic commerce operators have to register themselves irrespective of their turnover. So that's what is mentioned there. Then the second point you will not understand right now. He is required to deduct an amount as tax out of the consideration paid or payable by him to the actual supplier of goods. So this is called as TDS. So this will study in detail later on, the requirement of TDS. So when electronic commerce operator pays out to the real supplier, he has to deduct a tax at source. And the law requires operator to collect tax at source also. This is called as TCS in respect of supplies where the consideration is collected by the electronic commerce operator. However, these provisions would not apply to a transaction where monies are received by supplier on delivery, that is cash on delivery basis, and the delivery is made directly by the supplier. Now these points obviously you will not understand here. Just put a question mark and leave it there. We'll study them in detail Even I cannot explain it right now. It will all go over the heads. So we'll study all these points in detail in later discussions, later chapters. Actually section 51 and 52 will come, TDS and TCS. Then electronic credit ledger, I explained you before only. Cash ledger and credit ledger are two ledgers which are maintained. Cash ledger is for cash payments and credit ledger is for ITC, the input tax credit. Then exempt supply definition is there. This is important one. What are exempt supplies? Means any supply of goods or service or both which attracts nil rate of tax. So if the tax rate is given as nil against some goods, those goods will be called as exempt goods. Or which may be wholly exempt. Wholly means completely exempt from tax under section 11, that is by way of notification. So this whole chapter we are going to study of exemptions. So there section 11 we will study, in which the government has the power to grant exemptions. So exemptions can be part or whole. So exempt supply will mean only wholly exempt goods. Means if the GST is completely exempted, then it will be called as exempt supply. But if say normally there was a 18% rate, government has given a concession of 50%, so now you are paying 9% tax. That will not be called as exempt supply. It is still taxable supply. So if the rate is reduced, it means partial exemption. So partial exemption means that the goods are still taxable. They are still taxable, they are not exempt. When will we say that the goods are exempt? When there is 100% exemption, that is wholly exempt. Or under section 6 of Integrated Goods and Service Tax Act. So exemption for CGST is under section 11. From IGST it is under section 6 of IGST Act. So for interstate exemption you will have to see section 6 of IGST Act. For intrastate exemption you have to see section 11 of CGST Act. And includes non-taxable supply. Non-taxable supply, this we'll see in the definition of supply. Certain things are considered as not supplies. They are excluded from the definition of supply. So when they are excluded from the definition of supply, means there is no levy. There is no levy. The levy itself doesn't take place. So they are also called as exempt goods. For the purpose of definition, they are also called as exempt. So in bracket you can write down exempt includes non-levy goods and service. So non-taxable means no levy. So there are goods and services which are not levied upon. The tax is not levied in the first place. So they will also be called as exempt supplies. And the whole discussion is given there again below on the same lines. And especially this point that it includes three types of supplies: nil rate, wholly exempt goods. Now here partially is also written, but you cut off partially. Only wholly are covered. Supplies that are wholly exempt from CGST, IGST, and non-taxable supplies like alcoholic liquor for human consumption, on which there is no GST right now. So they will also be called as exempt supplies. And the following aspects need to be noted. Zero rated supplies such as exports would not be treated as nil rate. This is again very important point. Zero rated is considered as taxable supply. It is not considered as exempt supply. Even though zero rated means that there is no GST, right? We don't charge GST, but still they are considered as taxable supplies. Now I'll explain the concept why it is so, but there is time for that. And input tax credit attributable to exempt supplies will not be available for utilization or set off. This is another point to be noted. Input tax credit will not be allowed. Hence we define the whole definition of exempt supplies is for the chapter of ITC. And the main reason for defining exempt supplies is that if your output is exempt, if your outward supply is exempt, you don't get credit on your inputs. ITC will not, input tax credit will not be allowed on GST paid on inputs if your output is exempt. Why it happens like that? The logic we'll explain later on. Then there is definition of family. So let's do family, and then we'll stop this lecture, and then we'll continue in the next lecture. So here we'll take a break, but before that we'll see what is family. So family means spouse, means husband, wife, and children of the person, and the parents, grandparents, brothers and sisters of the person if they are wholly or mainly dependent on the said person. So parents, grandparents, brothers and sisters will be included in the definition of family only if they are dependent on me. Otherwise no. But normal definition of family means me, my wife and children. Or you, your spouse, means husband, wife as the case may be, and children. That's the normal definition. Parents, brothers, sisters and grandparents will be included only if they are dependent on you. Simple? Very good. Other than these, means if you see your in-laws are not considered as family. In-laws are not considered as family. Only your parents, not spouse's parents. Then your uncles, aunts, nieces, all those are not covered in the definition of family. So here we'll take a break, and then we'll continue in the